This is Nightly Business Report with Sue Herrera and Bill Griffin.
Wall Street cheers. Lawmakers reach a tentative deal on border security that would avert a government shutdown, and stocks take off.
Financial hardship. Not all parts of the country are experiencing an economic boom. And today, the Fed chair went to a town in Mississippi where even ATMs are relatively new.
Time is money, and all of that time you spend sitting in traffic is costing the economy tens of billions of dollars. Those stories and more tonight on Nightly Business Report for Tuesday, February the 12th.
And good evening, everyone, and welcome. Wall Street was in rally mode, extending the strong gains the market has seen this year. Investor sentiment was lifted by the two issues that we've been reporting on: optimism on trade and talks in Washington to avert a government shutdown. When reports first surfaced that a tentative agreement had been reached, stocks took off and never looked back. The Dow Jones Industrial Average rose 372 points to 25,425. The Nasdaq added 106, and the S&P 500 was up 34. Seema Modi was in the middle of all the action at the New York Stock Exchange.
Encouraging headlines from Washington fueling a big rally on Wall Street. First, stocks jumping on news that U.S. lawmakers have secured a tentative deal on border security funding, which could prevent another partial government shutdown due to begin Saturday. Markets keeping a close eye on trade developments out of Beijing, where U.S. delegation is continuing talks with China this week in hopes of reaching a trade deal before the March 1st deadline. Optimism pushing China-related names like Caterpillar, Deere, and Boeing higher by around 2%. The question is if the rally can last, and a lot of that will depend on the commentary from Beijing later this week. For Nightly Business Report, Seema Modi, the New York Stock Exchange.
Boy, just 24 hours ago, it appeared that lawmakers were still far apart on reaching any deal that would prevent parts of the government from shutting down again. But 24 hours later, there's a tentative agreement in place. But questions still remain. Yilan Mui has details.
Capitol Hill racing against the clock to finalize a deal to fund the government. Lawmakers have reached an agreement in principle that includes compromises on two key priorities. On border funding, the deal includes almost $1.4 billion for physical barriers, less than what Trump had asked for, but more than what Democrats initially offered. On immigration, Democrats backed off their demand to cap the number of detention beds for illegal immigrants captured inside the U.S., but the total number of beds would be reduced. Today, Republican leadership called it a bipartisan, bicameral agreement that includes a down payment on the president's priorities.
First of all, I hope he signs the bill. And second, I think he ought to feel free to use whatever tools he can legally use to enhance his effort to secure the border. So no, I would not be troubled by that.
But it remained unclear if the president would sign this deal. Speaking with reporters today, Trump said he wasn't comfortable with this compromise.
It's always nice to negotiate a little bit, right? So, whatever you get. But I would hope that there won't be a shutdown. I am extremely unhappy with what the Democrats have given us. It's sad. It's sad. They're doing the country no favor. They are hurting our country very badly. But we certainly don't want to see a shutdown.
Conservatives have come out against this. Senator Lindsey Graham says that he needs to see more detail on immigration. The House Freedom Caucus says this isn't a serious effort to secure the border. But with just days to go before Friday's deadline, lawmakers from both parties are urging the president to get behind this agreement because there is no plan B. For Nightly Business Report, I'm Yilan Mui in Washington.
President Trump today also commented on the trade negotiations between the U.S. and China, saying there may be some flexibility on the self-imposed March 1st deadline if the two countries are close to a deal. As of now, if no deal is reached, March 1st is the date that additional tariffs will be put on Chinese imports to the U.S. And while there is some optimism, there are also obstacles ahead of these high-stakes talks this week. Eunice Yoon is in Beijing.
The USTR's Robert Lighthizer has arrived in Beijing to join the ongoing trade talks. Both sides officially remain optimistic. The Chinese Foreign Ministry made a statement yesterday that China hoped for a good result. But I spoke to a source who's familiar with the negotiators on the Chinese side, and he painted a picture of frustration among the negotiators. There's a feeling that the negotiations are about the U.S. making demands on China, but not giving anything in return. For instance, he said the Americans have been unwilling to budge on restrictions of high-tech exports to China, which the Chinese believe can reduce the trade deficit and has been a long-standing complaint by Beijing. Generally, there's a sense that the Americans are being very harsh and not giving the Chinese face, and that it appears to them sometimes that certain negotiators want to push the Chinese to the point that the talks fail. Also this afternoon, we got a rather testy response from the Chinese government about what they see as a continued U.S. campaign against Huawei. Secretary of State Mike Pompeo is in Central Europe and has cautioned U.S. allies against using Huawei equipment on their soil. The Chinese Foreign Ministry responded today, saying the U.S. has threatened and provoked relations between China and other countries and discredited the legitimate development and cooperation of Chinese companies. The actions of the United States are neither fair nor moral. This highlights how difficult the negotiations are between the U.S. and China. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Back here in the U.S., oil prices rose along with stocks today after Saudi Arabia said it now plans to reduce oil production in March. The crude market is brushing off concerns, at least for today, that world oil demand could decline because of slowing global growth. Domestic crude sits around $53 a barrel right now.
Senator Marco Rubio is the latest politician to target stock repurchase programs. The plan would tax buybacks as dividends, which are subject to a wide range of rates. Buybacks are currently taxed at the lower capital gains rate. The senator expects the plan would likely result in fewer companies pursuing buybacks and instead would encourage more capital investment. Just yesterday, as we reported, hedge fund manager Paul Tudor Jones called buybacks a mania and said companies should focus more on what he calls ethical investing.
I think we've got a mania going on in buybacks and a mania going on in terms of shareholder primacy. It wasn't always this way, right? If we just go back to when I was a youngster, corporate pay, CEOs made 20 times that of the average line worker. So things have been different and can be different again. And if they're not, I'm really nervous about what the ultimate social consequences are in this country. I don't know if I want to see a legislative outcome for this. I'd love to see this happen organically.
Well, joining us now to talk about the impact that limiting stock buybacks would have on the markets, Eric Marshall joins us tonight. He's portfolio manager with the Hodges Funds. Eric, welcome back. Good to see you.
Good to be here.
Politics aside, what impact do you think limiting buybacks would have on the stock market? And let me ask it a different way. What impact do buybacks have on stock market performance, do you think?
Well, we see buybacks as actually a healthy mechanism to keep capital markets efficient. Oftentimes, if a company has excess capital and they don't have opportunities to reinvest that capital in projects that earn high returns above their cost of capital, sometimes the best thing to do is to return that capital to the shareholders through buybacks in the capital markets so that capital can be reinvested maybe in smaller companies who need that capital to grow their businesses and take advantage of higher return projects. So we actually think buybacks actually keep the market efficient, which ends up creating economic growth and jobs and benefits all of society.
What happens as the stock market continues to move higher, Eric, to the thought by companies that they want to do more buybacks, or do they do less buybacks in a strong market?
Well, that's a good point. If we have a situation where, as the market goes up, the cost of capital of equity capital becomes less expensive, then it doesn't make as much sense to continue to buy back stock. But I think over the recent phenomenon of all these companies buying back stock in recent years has really been a function of higher earnings yield on stocks relative to really low interest rates.
Right.
And as long as we're in that environment, it makes sense in a lot of cases for companies to return extra capital to the shareholders through these buybacks so that it could be reinvested elsewhere.
By the same token, though, while we are still in a relatively low interest rate environment, there are those who say that capital that they use to buy back their shares could also be used to build factories and create even more jobs. In other words, it's a better use of the capital than just buying their shares back. What do you think?
Well, that's a good point. Not all buyback programs are created equal. If a company can earn a return on capital by reinvesting in their business, as a shareholder, you'd want them to do that because that's going to create even greater value in the future. But if they're going to invest in subpar opportunities in a stagnant business, oftentimes the best thing to do is put that money back into the capital markets and let other companies that may be smaller, maybe more innovative, that maybe need that capital, reinvest it in other places in the economy that are growing faster.
Eric Marshall with the Hodges Funds. Again, thanks for joining us tonight.
Thank you.
Time to take a look at some of today's upgrades and downgrades. Cisco was downgraded to equal weight from overweight at Morgan Stanley. The analyst cites slowing growth in Cisco's networking security business. The price target is $49. Cisco reports its earnings tomorrow. The shares rose a fraction to $47.89. Take-Two was downgraded to underperform from market perform at BMO Capital Markets. The analyst cites a decline in buzz around one of its most popular video games. The price target is $80. The stock fell about 4.5% to $89.25.
Gilead Sciences was downgraded to market perform from outperform at Wells Fargo. The analyst cited a lack of growth catalysts following a recent drug trial failure for the company. Price target now is $68. That stock fell 3% today to $65.40. And surgical equipment maker NuVasive was downgraded to hold from buy at Jefferies. The analyst there says he's skeptical of all the reports recently that British company Smith & Nephew is ready to make an offer for NuVasive. And even if it does, the analyst thinks a bid above $60 a share is not likely. And so the firm cut its price target to $60, but the stock still rose on that takeover chatter. It was up 3.5% today to $58.08.
There are a record number of job openings. The Labor Department today reported 7.3 million open positions, which is the most since the government started tracking that data in December of 2000. Economists say the report shows that employers expect demand to remain strong. The number of job openings is also much greater than the number of unemployed, which totaled 6.3 million last month.
And while the labor market remains strong, economic growth is still uneven. That's especially the case in the Mississippi Delta and other low-income parts of the country, where many residents still don't even have a bank account and where ATMs are relatively recent arrivals. Fed Chair Jerome Powell traveled to that region today to address that very issue. Steve Leisman has the story for us tonight from Morehead, Mississippi.
2 fires in her homes in the Mississippi Delta left Farrah Appleberry and her 4 girls destitute and in bankruptcy.
We have to pray. And we prayed in unison because I didn't want to lose another home. And one of my girls said, Mama, it's going to be all right. God got us, that this too shall pass.
And along, literally, came hope. A credit union focused on economically distressed areas in the South that brings basic banking services to the nation's poorest.
The rate of poverty here is 3 times what you see in the nation as a whole, even greater for the region's African American residents. If you look at level of banking services, 3 times the level of people who don't have a banking account. And when you add the number of people who use check cashers and payday lenders, almost between 60 and 70% of the members who joined our credit union were outside the banking system or on the edge of the financial system, paying high rates or did not have basic tools to support their families and stabilize their financial lives.
You can see the absence of banking services in poor towns like this throughout the Mississippi Delta. Nationally, 1 in 4 Americans is estimated to be unbanked or underbanked, meaning they don't have access to basic banking services. Some live in banking deserts where there just aren't any branches for miles. Some people don't trust banks, and some people think they're just too poor to open an account. But there's also more focus on the issue. Tuesday, Fed Chairman Jerome Powell made an historic trip to the Delta, speaking to students and attending a conference along with investment bankers and community activists to shine a national spotlight on the problem of the unbanked.
Access to safe and affordable financial services is vital, especially among families with limited wealth, whether they're looking to invest in education, start a business, or simply manage the ups and downs of life.
Access to banking is such a problem down here that it was only in 2015 that Hope opened the town's first bank ATM.
When Hope came in, that was the first thing they did. They knocked a hole in the wall and put an ATM machine there. There was very little business that you could conduct here in Moorhead at that branch.
For Ms. Appleberry, the financial counseling provided by Hope means she should be out of bankruptcy by November.
Once I get out of bankruptcy, I know that it may not be the fattest account, but I'm looking to have enough money in Hope that if I have a dry day, me and my girls will still make it. So I had to learn to save small to get to big.
Coming up, did you know all that time you sit in traffic isn't only taking a toll on you, but taking a bite out of the economy? We'll have more on that a little later.
It has been a tough stretch for some of the video game makers recently, and it's been no different for Activision Blizzard, which late today reported revenue that missed estimates. The company issued weak guidance as well and said it plans to cut 8% of its workforce. Activision earned $1.29. That was a penny better than expectations, but it was the revenue of $2.8 billion that was considered disappointing. And so was the outlook that it provided for the first half of the year. And that sent the stock initially lower in after-hours trading tonight. Josh Lipton has more on Activision's results.
$6.3 billion. That was one big number in Activision's report, referring to net bookings. That's a measure of both digital and physical game sales. Oppenheimer's Andrew Urquhart says that's important because that metric captures all revenue the company is generating, and it was down over $1 billion year over year. On the other hand, Urquhart notes a potential positive. He says the company is now increasing headcount in development to accelerate the pace of new content from its leading franchises. But others at Activision will be losing their jobs. The company did announce a workforce reduction of 8% from its total workforce of 9,800 employees. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Under Armour powers past estimates. That's where we begin tonight's market focus. The sports apparel retailer reported better than expected earnings and revenue thanks to strong sales and growth overseas. Analysts say the company was able to cut excess inventory and generate excitement around new product launches. And that helped send the stock up nearly 7% to $22.21. Quarterly profits topped expectations at international brewer Molson Coors, but sales fell due to weak demand in the U.S. and Canada and rising transportation and aluminum costs. Molson, which makes Coors and Blue Moon beer, is also restating 2 years of financial results after finding accounting errors. Shares plunged more than 9% to $59.19. The private equity firm Thoma Bravo is buying mortgage software company Ellie Mae for more than $3.5 billion. Ellie Mae shareholders will receive $99 in cash for each share that they own. That is a 21% premium over yesterday's closing price. Today, Ellie Mae surged that much, up 21% at $98.95.
And here's another private equity play. JAB Holdings says that it plans to raise its stake in cosmetics conglomerate Coty from 40 to 60%. That's a bump of nearly $2 billion in shares of Coty, whose brands include CoverGirl and Sally Hansen. Coty's stock today rose about 12.5% to $10.87. And a group of Democratic senators is urging the Justice Department and the FCC to reject the proposed merger between Sprint and T-Mobile. The senators say that the $26 billion combination would raise prices for consumers and stifle competition. A House panel is set to hold a hearing on this deal tomorrow. Sprint rose about 3% today to $6.14, while T-Mobile added more than 1.5% to $69.60.
A new report from analytics company INRIX found that Americans spend a lot of time and money sitting in traffic every year. According to the data, American drivers lose about 97 hours a year sitting in traffic, and that congestion cost the economy nearly $87 billion in 2018. Trevor Reed, transportation analyst at that company, joins us now to talk more about the findings. Nice to have you with us, Trevor. Welcome.
Thank you for having me.
And you collected this data from all of these new connected cars that we're all driving in, correct?
Yeah, and we collected it from a lot of traditional sources too. So GPS, cell phone data, street coils, traffic cameras, you name it, we probably collect something from it.
Clearly, sitting in a car for hours a day is not being productive. Are there things that cities can do? I know some cities have staggered starting times for companies, so that you're not all rushing to get to town by 8 or 9 o'clock in the morning. What else can cities do to help companies?
There's a lot of different ways. One of them that's been very popular in Seattle is promoting the use of public transit amongst employers into the most dense portions of the city. And, you know, for every car you're able to get off the road in the most dense part of a city, it really pays big benefits as far as reducing traffic.
Now, you ranked some of these cities, Boston, Washington, D.C., and where you are, Seattle. They did not fare well in this particular study, but I'm struck by the fact that Boston and Washington, D.C. are very old cities. So do they need to commit more to infrastructure and that other type of transportation that you just mentioned in order to maybe try and reverse this or at least mitigate some of the issues?
Yeah, so I'm really glad you brought up the age of the cities, because what we found in our study is that age is the best predictor of congestion in a city. And when you think about it, it makes a lot of sense, because a city like Boston, it developed around walking, horses, even in the oldest parts of the city. And so it's really ill-suited to using an automobile, which is 20th century technology, in a 17th century, 16th century city. So especially in these old cities, the discussion should be much more about how do we use these streets most efficiently to serve these very dense populations.
Okay. And on that note, Trevor Reed with INRIX, thanks so much for joining us tonight.
By the way, California's governor is abandoning that state's $77 billion high-speed rail plan to connect Los Angeles and San Francisco. According to the Associated Press, cost was cited as the reason. During his State of the State, Governor Gavin Newsom also proposed a digital dividend that would allow consumers to share in the profits made by the tech firms in that state. He did not have details on how the dividend would work, but he did say something bold has to be done. Coming up, the box office got off to a slow start this year, but just wait.
Amazon and General Motors are reportedly in talks to invest in electric car maker Rivian, which specializes in electric pickup trucks and could be a Tesla rival. According to Reuters, the investment would give Amazon and GM minority stakes in the startup and would value Rivian at between $1 billion and $2 billion. Reuters adds that the deal isn't final. It could fall through.
Meanwhile, Nissan has cut its forecast for its profit and vehicle sales. It also took an $84 million charge related to deferred compensation it says was promised to former Chairman Carlos Ghosn. As you know, Tokyo prosecutors have charged Mr. Ghosn with underreporting his pay. The automaker said that it's facing a decline in global vehicle sales, especially in the U.S. and in Europe, and it will reconsider its plan to deepen its alliance with France's Renault.
Everybody loves buying something on sale, of course, but according to a new report, all of those markdowns cost retailers $300 billion in revenue last year. That equals about 12% of sales. This report does not include grocery retailers.
Well, we just a few weeks into 2019, but already it's apparent that the year is not starting the way Hollywood like. But are things about to change? Julia Borston takes a look at the box office challenges and why things may be about to heat up.
Run! The Lego Movie 2, the second part, has failed to turn around a struggling 2019 box office. It grossed $34 million at the domestic box office, as much as $20 million less than some estimates for the film.
Here you are, enjoy.
A disappointing weekend, bringing the year-to-date U.S. box office down 14.5% from last year, which was bolstered by a Star Wars film. And this winter, films such as Bird Box on Netflix have been making headlines and drawing attention.
The bar is definitely higher in terms of getting people to go to the movie theater because there's so much compelling content at home on the small screen. So now it comes down to the marketing, the strength of that marketing for movies in theater, those big tentpole films, the exciting Marvel movies, the horror movies, all those big franchises are going to be the films that get people off their couch and into the movie theater.
One issue, once people stop going to the movies and get used to streaming movies on Netflix instead, that means they stop seeing trailers and getting those reminders about why they should come back. A box office decline can start a vicious cycle. Analysts warning first quarter box office revenue could fall further on tough comparisons to last year's blockbuster Black Panther. But Disney's Captain Marvel, coming on March 8th, should start to turn things around.
The comparisons are going to be tough up until Captain Marvel, which thankfully is required viewing for Avengers Endgame, which is going to kick off really this summer at the end of April. So the good news is help is on the way. The bad news is it's going to take a little while to get here, but it's coming.
Expected to bolster the box office, a slew of sequels in the works, such as Marvel's Avengers Endgame, Warner Brothers' Godzilla King of the Monsters, Disney's Toy Story 4, and Sony's Spider-Man Far From Home. Plus, Disney is debuting 3 live-action remakes of popular family films, Dumbo, Aladdin, and The Lion King. Brands big enough that they can cut through the clutter and likely get crowds back to theaters. But there's no question, with so much content streaming at home, consumers need more reason to pay up for the more expensive trip to the theater. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Here's a look at the final numbers from Wall Street today. The Dow rose 372 points. The Nasdaq added 106. S&P 500 was up 34. That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.